Hey, Kevin here, top 100 financial advisor and best-selling author, and we're here to talk about the stock market. This was a wild day, and it's one of the craziest days that I can remember. So, what I'm going to do is recap what the heck happened today, what you may want to consider doing, what I think is going on, and just have a talk. So this is one of the reasons why I tell y'all to like and subscribe and do all that stuff, because unlike many creators in this investing space, I don't get to pre-record content. I don't get to sit down and say, let me put out 5 videos and record them a week ago and put them out. There are very few occasions when I'm able to do that. What makes this channel valuable and what makes you valuable and this community that we're building, what makes it valuable is that every day I sit down and do something fresh and new. And as I'm sitting here watching the market today, working with the kids, eating lunch, doing all this stuff, I'm getting notifications all day long. I thought I was going to come in here and talk about how this was going to be the worst investing day since March of 2020. And this morning I posted on Instagram again, we react to this stuff in real time. So this morning, which feels like almost every morning, I get a brand new alert from Yahoo Finance. And I posted this on Instagram today. 52-week low for Disney and Block and PayPal, and then later on it was even Amazon. I'm like, man, this is a bad day. Then I get another notification later in the day saying it's the worst day since 2020, since March of 2020. And I thought I was going to get on here and talk about what happened in 2020 and did a little bit of research and say, like, hey, look, we've been here before. We're in correction territory, which means the market is down 10%. Here's what happened the last time this occurred. It's not that big a deal, and it's not for me. And that was the plan. That was a plan. I was going to write some notes down. We was going to talk about it. And that's not what happened. Because by the end of the day, and really in the last 20 minutes of the trading day, the stock market said no. It pulled a Patrick Mahomes in the last 13 seconds, and all of a sudden, the market was green. I was down in one of my accounts, and I think it was my public account, because I don't look at my IRA, because I would have been real stressed if I was looking at that or my 401k. I don't check those. But my public account, because I get on there and talk every day, so it gives me the amount. So I was down $300, and I was like, whatever, no big deal. And then by the time I log back in the last few minutes, I'm up $70. You go from down 300 to up 70 in one day. And really, that swing up happened in the last 20 minutes of the trading day. So this, ladies and gentlemen, is what we call volatility. These violent ups and downs. And it could be like this for a while. And I don't think you're going to see, well, I'm not going to predict nothing. This is what volatility is. We did see a lot of this in March of 2020, where we had 1,000-point drops, and then it turned around and had 1,000-point gain, 900-point gain. Go back, if you got time, go back to those videos in March of 2020, and a lot of the same things that happened then happened today. Now, as an investor, my position has not changed. I had people ask me this morning. In fact, that's what we were going to talk about, was a comment that someone had made I thought was excellent, was, well, at what percent do you sell? And is this, does buy and hold investing still work, and all that kind of stuff? And my answer is yes. And the reason is this day is a part of that. Because if the stock market can recover so quickly in one day, I didn't see any news, maybe I missed it. I didn't see any news that said, oh, we're not going to cut rates, or this amazing thing happened, or COVID is magically gone, or supply chain has magically fixed itself, for the market to make that sort of rebound in just 20 minutes. But if you can tell me that the market can recover that quickly in 20 minutes, it can definitely do it within a year. Not just because we saw it today, but we saw this exact same thing in 2020, where the market was down more than 30% and somehow recovered before the end of the year. Now, that is not by any means a guarantee that the market will be green the rest of the year. It's not a guarantee it's going to be green tomorrow. I don't know what's going to happen. It's volatility. These is going to be violent, left and right, up and down for a little bit. Okay, but when I talk about buying and holding, this is why. This is, if this exact same thing happened but happened throughout an entire year, it would be 2020. That's exactly what happened. So no, I'm not concerned at all when it comes to the quality of stocks that I have, because on paper, again, they should be quality, at least most of them, right? When we talk about what happened today in terms of like Bank of America, they announced their earnings. They seem to have done pretty well. Morgan Stanley was okay. Like, yes, interest rates are going up, but does it really mean that, I don't know, a company like Microsoft or Google are much worse off? In reality, no. A company like Apple, at one point, I don't know if they still have this much money, they had like $1 trillion in cash or something ridiculous amount of money in cash. So if y'all got that money in the bank and y'all not doing nothing with it, and you could whenever you wanted to, is the company really that bad where it has to drop X%? Probably not. Netflix, different story, right? But stuff like this, it's going to continue to happen this year as the threat of interest rates are still out there. The funny thing is, no one has actually raised interest rates yet. This is just, hey, we plan on raising interest rates at some point in 2022. In fact, we plan on doing it three, 4, maybe even 5 times. And the market is acted an absolute fool just because of that. Just because it has not occurred yet, and that is, the market is already reacting to it. So it's weird. It's crazy. It's also crazy because we knew this was going to happen. If you've been here and you get the notifications when these videos go live, you know that I have been talking, and it's not just me. This is basic information. If you've been watching any news source, any investing source, everybody has been talking about interest rates for years now, or not years now, but for several months now. It's one of the reasons why I kept Capital One. It's one of the reasons why I've been telling y'all about bank stocks for so long now. It's why we talked about REITs for what feels like for forever, because we knew for a fact that this was going to be a thing. So it shouldn't be a shock. The market, in my view, shouldn't have dropped this ridiculous 10% before today anyway. This year, this season of January. That doesn't make sense because you knew it was coming. But in either case, that's an opportunity I see to buy some decent companies and to hold on to them, provided that you plan on sticking it out for the long term. The other thing too is, anytime the market drops, I think it says a lot about you. Okay, it says a lot about you. Now, if you looking at that and you felt bad, I didn't say it was a bad thing. I just said it says a lot about you. So you self-evaluate at this point in time, because a lot of times when we talk about, if you had bought Amazon at the IPO price, if you had bought Tesla at the IPO price, you'd have X millions of dollars today. What a lot of people don't realize is that it did not go up in a straight line, especially for a company like Amazon that went public, if I'm not mistaken, I think it was in 1997, and things were fine, and then you had the dot-com bust, which means that it dropped severely. The entire market dropped severely from 2000, 2001, and 2002. So if you can't survive, right, and you are panicking and you are getting rid of companies because of a 10% correction, then you probably weren't best suited to hold on to any IPO, because a lot of these IPOs can be crazy. And that's not a license to say invest in all IPOs or anything like that. I'm just giving you a real world example of, hey, it looks great in a meme, it looks great in an article, but can you do it in real life? And can you sit down and watch some things happen and be patient enough to allow things to go through? A lot of people were not patient today. A lot of people weren't patient 2 weeks ago when this started hitting, or yesterday, or not yesterday, but last Friday. This is, again, you learn a whole lot in times like this. And yes, this is a dip. I'm really not moving and doing anything. I'm going to come back on Friday. I'm a DCL Friday, whether the market is green, red, yellow, or whatever. But I'm doing it because I believe in long-term investing, and whatever quote-unquote dip we're in right now, I believe, based on what we've seen in the past and based on the companies that I own, that a year from now, 6 months from now, 2 years from now, this is going to be a blip in the radar, and we're probably not going to remember this in the way that you feel right now. Losses psychologically feel worse than wins, or they feel more significant. They feel heavier than wins. Because remember, look at it like this. Okay, the stock market in 2021, which was what 2021 was, I don't know why somebody's calling me a spam. So 2021 was basically 25 days ago. So that's 24 plus 1 day. I think that's December 31st. So last year, 25 days ago, the market was up 27% in 1 year. It was up 27%. In the last 24 days, minus the weekends, of course, we're down 10%. So technically, right, you made 27% if you were investing in 2021. You lost 10% perhaps, and now you're at 17% gains. Is that reason to panic because you're still up 17%? The answer would be no. It really isn't. Especially if you're investing in some high flying company, you're probably still up. You're probably still okay. And I don't want to overly panic because of the first 24 or so days in the market when I know I have trading days anyway. I know I've got 250 or so trading days. We're 10%, close to 10% of all the trading days. I'm not going to overreact to this one moment and say, oh my God, everything's trash. Let me sell now, trying to avoid some losses, and then come back when things repair, come back when things are better. Like, would that be today? Like, this is one of the reasons why I don't try and do tons and tons of trading, because of days like this. So if I woke up this morning and let's say it was Disney, which I don't own, but let's say it was Disney and say, oh my God, the market is down. Let me get out of Disney and come back when things are better. Well, the market is up now. What do I do with that? What do I do? Do I go buy Disney now? Do I go buy Disney tomorrow? Now you're a huge question mark, and you could very easily say, okay, well the market was up, it's back now. Buy in on Tuesday, and then it continue to fall, and then you lost twice, right? So this is why I buy, I hold, and I let things play out, because just like it was today, there is no telling whether things could be fine between here and June. Things could be fine through here through December. I don't know. I literally do not know. I do not have a crystal ball. I wish I did. But stay patient, because you never know what's going to happen. And more times than not, history tells us that you're going to be fine, provided that you hold companies that make a lot of sense. Many of those we've covered before. I don't think it makes sense to invest in something that doesn't make sense. And when I say doesn't make sense, I mean, like, just look at how the market is going. Fintech, for whatever reason, it ain't doing right. Whether it's Coinbase or PayPal or Block or even Robinhood. Like, Robinhood is down close to 50% from its IPO prior to today. I don't know where it is today. That sector, for whatever reason, I don't think it should be down. I don't think Disney should be down either, if you ask me. But it is. I don't think Netflix should have been down 20% on Friday. But it is, right? So given what we have, maybe those aren't the places that make the most sense. So I might not stick with those right now. I might stick with places that make sense, like defensive stocks, like REITs, maybe financials, maybe energy. We'll see. But stick with the stuff that makes sense. Stay with the long term, because this short term stuff, that's what's going to give you a heart attack. Because if I were like a super day trader or a super options trader, this would have been the day that would took me out, because it was absolutely crazy. So you want to be a fan in the sidelines or watching TV like I was with the Bills Chiefs game. Like, man, that's crazy, because I don't have a dog in this fight. I just I am entertained. Now, I wouldn't call this entertainment, since it was my money and it was your money. So I'm not gonna call it entertainment, but I'm glad I sat back. I'm glad I didn't react. I'm glad I just sat there and said, hey, it is what it is. That happens. I wasn't selling. This wasn't today was not moving day or anything like that. So yeah, let things play out. There are so many things in the market that could be both positive and perhaps negative, but more times than not, these things are usually positive, and you're going to be fine. Even if we weren't fine, though. Even if we weren't, I'm still not going to be deterred, because these 10% corrections happen every 19 months on average anyway, going back to about the 1950s. Now, provided that tomorrow is a normal day, I would like to go more into that stat, which you need to know. But 19 months, I mean, that's a year and some change, which 2021 was a year. Some change would be 2020, which puts us right back to where we were in 2020. and the market did dip. The market had more than a correction, and we were still fine. In fact, those who bought during that time, those who DCA'd during that time, which is what I was telling y'all. I did tell y'all in 2020 to dollar cost average. I did say that, right? And those that did made a whole lot of money because they bought at the bottom, right? We didn't know it was a bottom, which is why you DCA, so you don't have to guess, right? So they didn't know it was a bottom, and they bought it. Things rolled up. Everybody was fine, okay? So if this is the same thing, which I don't think it is, I think it's a bit different. However, the concept is still there. So if you are buying quality investments, perhaps you're dollar cost averaging, and most importantly, you are staying patient. You might be okay, which history tells us 9 times out of 10, 8 times out of 10, that's going to be the case. So that is it for me today. I don't know what video I'm doing tomorrow. I got a list of stuff I want to do, but when the market does crazy stuff like this is what I got to talk about, because my DMs, they be lit in terms of questions and reactions and memes that people send me, which tend to be funny, but ooh, what a day. All right, so that's it for me. Like and subscribe, do all those things. We'll talk about something tomorrow. If not, I've got a list because I got stuff I want to talk about. But when it's something as crazy today, we got to address it and explain what's going on. All right, that's it for me. I'll talk to you guys later. Bye.